Hello, my name's Ethan. Make sure to check out my website, ethanwrenn.com, from there you can find links to all my various socials. We're currently live on Twitch, YouTube, and the front page of my website. Make sure to check it out. I have a blog on there. I have a store where we have merchandise available. Go check it out. It's pretty cool. So what is it we are up to? We're going to be looking at a video called How to Use Cup and Handle Price Patterns, posted by the official TD Ameritrade account.
Is a price pattern investors use to help identify uptrending stocks that are in a temporary holding pattern. This price pattern is a bullish continuation pattern, which means it can be found in uptrending stocks and indicates that the previous uptrend may continue if the stock breaks out of the pattern. In this video, we'll discuss how to identify cup and handle patterns. We'll also show you how you might use them to help identify entry points, set stop losses, and determine a price target. Identifying a cup and handle pattern is relatively simple because it looks like a teacup with a handle. The cup portion of the pattern starts to form when an uptrending stock reaches resistance and then reverses direction.
You know what this pattern also kind of looks like? Note what she said about it so far. This is a continuation pattern. This is a pattern that presents itself in a stock that's already trending up and then enters a temporary holding period. If you were to look at this maybe a little differently and drew a line right here, what do you have? You have an ascending triangle pattern or a bull flag with the static resistance, 1, 2, and then the support with rising lows, increased buying pressure over time.
And moves down. The cup portion will finish if and when the stock reaches support and reverses direction again, this time moving up. The handle is formed if the stock moves down and reaches higher support, and then moves up to resistance again. The handle is typically 1/3 to 2/3 the height of the cup. At this point, investors might wait for the stock to break out above resistance, which would signal the larger uptrend might continue. Now that you know how cup and handle patterns form, let's discuss how investors may use this pattern to help identify entry points, set stop losses, and determine a price target. When a cup and handle pattern forms, investors typically wait to see if the stock breaks above resistance. If it does, some investors might consider this an entry signal. However, other investors might look for additional confirmation, such as high volume, before entering the trade. High volume might indicate that new investors are buying the stock, which could push the price higher. However, as you're probably aware, trades don't always play out as expected. For this reason, investors typically set stop losses below the handle. In addition to stop losses, investors also use this pattern to identify.
I like how they mention that how a trader might approach the style of breakout play. We've talked a lot about different types of breakout trades you can make throughout this series. And again, you would wait for the break above this resistance to enter a market buy order, and simultaneously putting a stop loss, again, as they stated, right below the handle. And you're basically locked in, riding the momentum of all the other traders also partaking in the breakout play. The distance, the expected return you could expect on the breakout play would be the difference between this resistance and this support here added on top, just like you would expect to see in some of the symmetrical triangle pattern videos we've done, or the ascending triangle pattern videos we've done. So I like that they noted that.
This pattern to identify potential target prices. There are two ways to set a price target with this pattern. One way is by determining a smaller price target. You do this by measuring the height of the handle and adding it above the resistance level. The second way is by determining a bigger price target by measuring the height of the cup and adding it above resistance. When choosing which price target to consider, keep in mind the bigger price target will most likely take more time to achieve than the smaller price target. Therefore, short-term investors prefer the smaller price target, and long-term investors prefer the bigger price target. But there's no guarantee the stock will reach either price target, which is why it's important to manage risk with a stop loss. Also, the overall trend of the broader market may influence the outcome of a cup and handle pattern. For example, if the broader stock market is trending higher, a stock breaking out from a cup and handle pattern might be more likely to trend higher. On the other hand, if the market is downtrending, use a price pattern that works in this trading environment, such as bearish flags or triangles.
I don't know what the fuck this is, but it is not a flag, let alone a bear flag. Oh my god. The amount of stupid I just saw. Damn. This would be a price channel, if anything. This is not a flag. A flag would have a point, right? You know, a point, flag. Clearly understand. This is nothing. This, on top of that, this is the farthest thing from a bull flag or the farthest thing from a bear flag I've ever seen in my life. This rising support would be an increase in support over time. This rising resistance would be a decrease in sell pressure over time. This is the antithesis of not a bear flag. I don't know why they put this here. This is just ridiculous.
But within the context of an overall uptrending market, a cup and handle price pattern can help you identify bullish investments that may continue trending higher.
Well, for the most part, I feel like that video was pretty educational and had a lot of great information. Again, if you guys are new here, my name's Ethan. Make sure to check out my website. Give me one moment, and we're going to do a few more before we wrap up for the day.